Thai cabinet has approved an additional stimulus package valued at over $190 million amid a slowing global economy. Southeast Asia's second-largest economy had its weakest showing for growth in 4 years. Its GDP expanded 2.3% in the second quarter as exports declined amid rising trade tensions and a strong baht. The additional package comes months after the government rolled out a $10 billion stimulus program. The measures announced include a 2 billion baht consumption promotion program, reduction of real estate transfer fees worth 2.6 billion baht, and low-interest loans from the government housing bank.
A third of banks globally are unlikely to survive a serious economic downturn and must radically revamp their business models. According to management consultancy McKinsey, investor confidence in banks globally is also again weakening a decade on from the global financial crisis. And this as margins tighten and revenues and loan growth slow. The industry also faces threats from a raft of small fintech startups and bigger technology companies looking to enter banking or payment businesses.
Saudi Arabia has hired banks, including JP Morgan and Standard Chartered, to manage a $2.5 billion issuance of sukuk or Islamic bonds. That's revealed in a document from one of the banks leading the deal. The deal would be the kingdom's first international debt transaction since attacks on its oil facilities last month that initially halved Saudi crude production. The strikes led to a rating downgrade by Fitch, which cited increased geopolitical risks and the possibility of further attacks. Saudi Arabia has borrowed extensively over the past few years to offset the impact of lower oil prices on state revenues. This year, it raised $3.3 billion in its first bond sale in that currency and $7.5 billion in conventional bonds in January. The document shows that the new sukuk transaction would complete Riyadh's external funding requirements this year.